Welcome to Leo's English Lounge. Today, we're talking about something really interesting happening in the world of finance. A very old, very famous school is making a big move into something very, very new.
That's right, and it's being called a signal that could change Bitcoin's next decade. This isn't just a small news story.
Exactly. When a super careful and traditional investor does something like this, everyone pays attention. It suggests a really big change is happening.
Okay, so let's get into our first section, Harvard's Bitcoin Bombshell. So here's the big news, the bombshell. Harvard University, which has a lot of money to invest, has just bought a good amount of Bitcoin. And this is a huge deal.
It really is. If you look at Harvard's investment history, they are famous for picking winners very early. Think about companies like Apple, Microsoft, and Google. Yeah, they invested in them when they were young companies, and now they're putting Bitcoin in that same group. It's like saying they believe Bitcoin could be as important as the internet or the personal computer. It's a huge statement.
And we are not talking about a small amount of money here. Harvard's investment fund is worth $50 billion.
Wow, that's an incredible number. And you have to understand, Harvard thinks very long term. They plan their investments for like 100 years. They aren't just trying to make quick money. They are making a bet on the future.
Now for our next section, the Wall Street Bridge, understanding the ETF. Right, because the story isn't just that they invested. The really important part is how they did it. They used a new kind of tool that's like a safe bridge for big money to cross over into the world of crypto. And that tool is called a Spot Bitcoin ETF. So what is that? Well, an ETF is an exchange-traded fund. Basically, it's something you can buy and sell on the stock market, just like a share in a company.
Exactly. So this special ETF follows the price of Bitcoin. For a big place like Harvard, it means they can buy Bitcoin through their normal safe investment company. They don't have to go to a special crypto website or worry about complicated things like digital keys. It's simple and regulated.
Let's compare the old way versus the new way. Before, buying Bitcoin was complicated. You had to use special crypto exchanges, manage your own secret private keys, and there were a lot of security risks.
But now, the new way is super simple. It's a regulated purchase through a broker you already trust. It's just like buying a stock in any other company. This changes everything for big, careful investors.
Okay, on to the next section, the logic of big money. Why now? This is the most important question, right? Why are these very traditional, very careful investors deciding to buy Bitcoin now? What has changed? Well, it seems like the reasons for big institutions to buy have become much clearer. For years, people argued about it. But now, the conversation is different.
Yeah, they're starting to see it as a way to protect their money from inflation. That's when money loses its value over time. They call it digital gold. It's also a way to diversify their investments, which just means not putting all their eggs in one basket.
And the company that built this bridge, this ETF, it's a company called BlackRock. And they are huge. They manage over $10 trillion. I can't even imagine that much money. When the biggest money manager in the world does something, you know it's a serious move. The whole financial world stops to watch. And the interest has been incredible. BlackRock's Bitcoin ETF, which has the symbol IBIT, got to $20 billion in assets in just a few months. That's one of the fastest growths for an ETF in history.
That just proves that so many big investors were waiting on the sidelines. They wanted to invest in Bitcoin, but they were waiting for a safe, easy way to do it. The ETF was the key that unlocked all that demand.
Right. Which brings us to our next section, the coming stampede, the herding effect.
Ah, the herding effect. This is a classic idea in finance. It's like with animals. When one sheep starts running, all the other sheep follow. In investing, nobody wants to be the very first to try something new and risky. But nobody wants to be the last either.
And we can see this happening. To be fair, Harvard wasn't the very first university to get into crypto. Yale University invested a little bit back in 2018. That's true, but Harvard's move is different. Because they use this new, simple ETF, it's like they've opened the main gates for everyone else. They've shown that it's now easy and acceptable for any big institution to do the same. And you can just imagine the conversations happening in offices around the world. People are asking, if Harvard's buying, why aren't we?
Exactly. Harvard has given them the perfect reason to invest. It's like getting permission from the smartest kid in the class. This is how a small trend can turn into a huge one, like a snowball rolling down a hill and getting bigger and bigger.
Okay, let's move on. This next part is fascinating. Section 5, a perfect financial storm. Supply meets demand.
This is where it gets really interesting. because Harvard's investment is only one half of the story. It's happening at the exact same time as another really important event that's built right into Bitcoin's code.
So you have these two powerful forces meeting. On one side, you have the new ETFs, which are causing a huge increase in demand. So lots of people and companies want to buy Bitcoin. And on the other side, you have an event called the halving. The easiest way to think about it is this. The amount of new Bitcoin being created was just cut in half. So the supply of new coins is suddenly much smaller. It's like if a popular musician announced they would only release half as many albums next year. The albums would become more rare and probably more valuable. So when you have this huge new demand from ETFs meeting a suddenly smaller supply from the halving, it could create a really big shift in the price.
Right. Many people who study markets think that this combination could make the next couple of years, like 2025 and 2026, a very important time for Bitcoin's value. It's all based on these simple ideas of supply and demand.
So what this all really means is that the Bitcoin market is growing up. It's evolving.
Totally. For the last 10 years, the price was mostly moved by regular people, what we call retail investors. It was based a lot on feelings and excitement. But the next 10 years look different. It seems like it will be driven by big institutions with long-term plans.
Which leaves us with one big final question to think about. Has Bitcoin's Wild West era finally ended? And has the Wall Street era just begun? That is a great question. And it actually brings me to my own question for today. With all these big companies getting involved, will Bitcoin still be a tool for regular people, or will it just become another asset for the rich? Personally, I think it's a bit of both. It might become more mainstream, but I hope it still keeps its original idea of being open to everyone. What do you think? That's a good one. My question is this. Does making Bitcoin safe for Wall Street take away what made it special and rebellious in the first place? I think it might lose some of its cool factor, but maybe becoming a little more boring is exactly what it needs to survive long term. We'd love to hear your thoughts on these questions. Thanks for joining us at Leo's English Lounge.